I'm not shocked that we hit that magic number and all of a sudden the big sell-off. So I'll leave it at that. Thank you.
These metals took off and tripled in value. Base metals. I'm betting it's well over 100. It may be between 100 and 200. And I think a lot of that's going to occur in a handful of months, 5 to 6 months.
Probably bang around here toward the end of the year. We'll get into the fundamentally positive 26 with yield curve control, sharp rate cuts, a new Fed head, all this kind of stuff. And then I think that's the trigger to get you to what Michael just talked about, a blast through 50. If it goes up 80% like gold did in 18 months, we'll be talking $90 silver by 2027. So anyway, I tried to spit that out as quickly as I could.
Silver stands on the edge of something monumental. Not just another rally, but a full-blown revaluation that could redefine its role in the global financial system. For decades, the metal has been trapped between $20 and $50 an ounce, a range that felt like a cage built by manipulation, complacency, and distorted paper markets. But now, something is shifting deep beneath the surface. The futures market is flashing a rare and powerful signal, backwardation, where the spot price of silver trades higher than future contracts. It's a condition that whispers of scarcity, of a market running out of physical supply, and it hasn't been seen at this scale since 2011. Backwardation doesn't just happen by chance. It's the market's way of saying, there's not enough metal to go around. Technically, silver's setup now mirrors what gold looked like just before its explosive 80% rally earlier this cycle. The charts are tightening, momentum is building, and the resistance at $50, a level untouched for over a decade, is starting to tremble. Once silver breaks through that ceiling decisively, it won't just inch higher. It could catapult into an entirely new reality, somewhere between $100 and $200 an ounce. It sounds outrageous until you look at the ingredients coming together. Suppressed valuations, shrinking supply, and a global monetary system under strain. Together, they form the perfect storm for a historic breakout. Veteran analysts like David Morgan, Michael Oliver, and Craig Hemke have been tracking these shifts closely, and their conclusion is unanimous. The next great move in silver is imminent. Their data shows that decades of manipulation are finally meeting the immovable force of physical scarcity. Technical triggers are lining up with fundamentals in a way that hasn't happened since the late 1970s. The market is coiled, tense, and ready to move. When it does, it won't be gradual. It will be violent, fast, and transformative.
Well, I think we're going to get through 50, and I think we're going to look at it in the dust at some point. But to be consistent, I have said over and over, as you know, that I thought we might stall out at 50 because it's such a psychological barrier. And we saw one increase in margin requirements. And I noted that. I think I retweeted it to Craig, if I remember correctly. And this is what they do. I mean, they keep increasing margin requirements until, you got to put up basically the cash cost for the commodity. And then you see the market fall off. We're getting that direction. I'm not surprised. I got let's say, I won't say angry, but a agitated member this morning. First thing I get up, I haven't even had my coffee. What the hell's wrong, David? Silver's at 51 and every one of my stocks is down. What I said was, look, normally the shares lead the metal. And this is the pros taking profits in the shares and selling it off. And it's like they get the memo ahead of everybody else. So I don't want to put on the foil hat too much. There are times where these markets do what they do because of the setup. And this is one of those moments. And I do want to show a chart later on, Elijah, but I just want to hand it over to my colleagues and hear them. And I'm not making this an I'm a right and, whatever, because I want to see a couple more days of trading. But I'm not shocked that we hit that magic number and all of a sudden the big sell-off. So I'll leave it at that. Thank you.
Okay, I think it's idiot selling. Our assessment technically is that silver is about to make a quantum leap to a new reality. It's not heading a bull trend. It's in a total shift phase in its price zone that it's lived in for 50 years. 50 highs, basically 20 is sort of a low, and it just lived there forever. go to the Federal Reserve of St. Louis, Fred, and you can punch up charts like lead or zinc and go back in price history. And they'll have a monthly close-only chart going back to the 1990s anyway. And you'll see that they lived in a zone for quite a few, decade and a half or so, both those base metals. And in 2006, very late that year, silver and gold were already in a bull trend at that point. These metals took off and tripled in value, base metals. And since then, they've come back down, but they've never come back down into that prior zone of reality. They live in a new zone of reality that is double or more on average for the last 10, 15 years of what it used to be back in the 1990s to 2000. Well, silver's still in that first range, okay, where it was from the 1979-80 high, the 2011 high. Gold's above the 2011 high, copper's above the 2011 high, and silver's still contained here? Give me a break, okay. We know the fundamentals. I don't try to keep up with them too intimately because that's not what we do. But the technicals argue to us that we're about to blast out of this range and not just have another nice leg up, but move into a price zone of new reality. I'm betting it's well over 100. It may be between 100 and 200. And I think a lot of that's going to occur in a handful of months, 5 to 6 months. We're waiting on one trigger. That's a spread relationship between gold and silver. And we run momentum studies of it as well. Now, everybody looks at the ratio, the 80, 70 to 1 type thing. We do it a different way. We divide silver to gold, express it as a percent. And right now, silver is about 1.2% of the price of an ounce of gold. That's extremely low going back 50 years. It's been over 2%. In 21 of the past 50 years, silver has reached 2% of the price of gold. And some of those weren't even bull market years. Okay, so we're very submerged, but there is a very clear structure on the spread charts. When you plot the spread chart, silver versus gold, there is a pending triple top breakout at 1.31%. So we're not far below there. When we cross that level, the same thing happened to its spread versus gold in 1979 and in the fall of 2010, just before silver went totally vertical. It went from like 20-something bucks to 50. Boom! All in a handful of months. The spread was the tell. And we're watching that. We think it's going to break through. And our momentum of the spread suggests that even a lower level than that 1.31%, which is a prior double top, will break out before that. And when we do, when that spread breaks out, I'm putting the seatbelt on. I think silver is the place to be for the next 2 quarters, and the move could be enormous. And you look back and say, oh, now I understand why. Supply demand's been tight, et cetera, et cetera. Market has been an irrational level for too long compared to other metals, for example, that have done the same thing, had a tantrum and moved to a new reality. Anyway, that's my major comment.
The most curious thing about where we've finished up here today, I think it brought us to this point, is this, I've never before seen backwardation on the futures board. At one point this morning, the spot price was higher than every silver contract all the way out to September of next year. And at one point, more than $2 higher than the current front month, December. It's not something we've seen in gold. Gold has maintained about what you'd expect, about a $20 contango or premium to spot. But this big inversion, this backwardation, whatever you want to call it, in silver is telling us something. A lot of people think it's an evaporation of the free float available physical in London. We'll see. But that's something that we didn't have in 2011. And so then kind of adding this on to the last thing I wanted to say, Elijah, I think when last time we spoke, I started thinking about late August, early September, and I think we probably discussed this, that silver was going to go up to $48 to $50, but then stall for some of the reasons that Michael just mentioned, and David has mentioned, going up, great resistance at that level because it's been there a couple times before. But to me, the situation is not analogous to 2011 or 1980. It's analogous to gold back in December of 2023. And today's price action looks like the action in gold on the 1st of December. Gold had rallied on that Friday, the last day of November, and on the Sunday night, December the 1st, it took off in the first half hour and broke out above, the previous highs above 2100, and then was massively reversed. And the selling continued all day on Monday, and you had these wipeout reversal candles on the chart, and everybody threw up their hands and said, that's it. Gold can't make new all-time highs. We're going back down to the 200-day moving average, going to 1200, or going to 800, all that stuff. Gold took 90 days banging in there between, falling down to 1800, going back up to 2000 and 2100. Took 90 days banging up against her. And then once it broke out on March the 1st of 2024, it's now rallied 80%. That's, I think, analogous to what we're seeing here. Big reversals today, big, ugly candles on the chart. Every technician's going to be out there over the next couple of days saying, that's it, silver, it's dead, it tried again. Probably bang around here till the end of the year. We'll get into the fundamentally positive 26 with yield curve control, sharp rate cuts, a new Fed head, all this kind of stuff. And then I think that's the trigger to get you to what Michael just talked about, a blast through 50. If it goes up 80% like gold did in 18 months, we'll be talking $90 silver by 2027. So anyway, I tried to spit that out as quickly as I could.
To understand the magnitude of what's unfolding, you have to look beyond the charts and into the real economy. Silver's long-standing imbalance between supply and demand has reached a breaking point. For years, we've seen structural deficits quietly draining global inventories. Industrial demand, driven by solar technology, electric vehicles, and electronics, has exploded, while mining output has stagnated. Even when you add in recycling, the world still consumes more silver than it produces. This imbalance is no longer theoretical. It's visible in data, in inventories, and now even in price behavior. What makes this moment so dangerous for the paper silver market is that industrial users are effectively cornering the physical supply. Not deliberately, but out of necessity. They need silver to function. They can't produce solar panels, electric car batteries, or semiconductors without it. And as they secure physical metal at any cost, the available float in the market is shrinking rapidly. Yet, despite this tightening squeeze, silver's price remains absurdly undervalued when compared to gold or inflation-adjusted historical levels. The disconnect between real-world demand and paper-based pricing is becoming impossible to ignore. For more than a decade, traders and big institutions have used leverage and derivatives to suppress silver's natural price discovery. But markets always find equilibrium. And when the physical market finally takes control, the correction toward fair value won't be calm or orderly. It will be swift, brutal, and long overdue. When that happens, silver won't just rise. It will reprice itself for a new era, one where tangible assets reclaim their dominance over financial illusions. Silver's story isn't just about economics, it's about trust. Every time inflation surges, every time governments print money to solve another crisis, silver quietly reminds us of what real value looks like. It doesn't default, it doesn't need a central bank, it doesn't rely on political promises. It simply exists, pure, finite, and essential. And now, as global debt spirals out of control and confidence in fiat money begins to erode, silver is transforming from a commodity into a symbol, a signal that the era of easy money is ending. Inventories across major exchanges are evaporating, with vault holdings hitting multi-year lows. The remaining ounces are being pulled off the market by long-term holders, industrial buyers, and even central banks diversifying away from the dollar. Each ounce is becoming harder to find, more valuable to own, and more powerful as a store of real purchasing power. Analysts like Morgan and Hemke agree. When the world finally realizes how little silver is actually available, the rush for physical metal could make the gold rush of the 1970s look tame by comparison. This is why silver's coming move isn't just another trade. It's a signal of something much bigger, a reflection of the global system's instability. As currencies weaken and debt mounts, investors are turning back to hard assets, things that can't be printed, devalued, or faked. Silver sits at the intersection of two worlds, the industrial future and the monetary past. It powers technology, yet it also anchors trust. When those two forces collide, price discovery doesn't just happen. It explodes. If history is any guide, this next phase will catch most investors by surprise. That's always how it happens. When gold broke above $2,000, few believed it would sustain the move. When Bitcoin first crossed 1,000, the crowd said it was too late. But silver has a tendency to move in silence. It builds pressure quietly, then unleashes with breathtaking speed. The difference this time is that the macro backdrop is aligning perfectly. Inflation is persistent, currencies are losing purchasing power, and governments are trapped in a cycle of spending they can't stop. In this environment, silver isn't just another asset. It's insurance against a failing monetary experiment. It's a lifeboat in a sea of digital promises. And when the world wakes up to that truth, there won't be enough metal left for everyone who wants it. This is how paradigm shifts begin. Quietly, slowly, and then all at once. Silver's revaluation won't just change portfolios, it will change perspectives. It will remind the world that real wealth doesn't come from a balance sheet. It comes from owning something real, something finite, something the world cannot print. And as we stand at this turning point, it's becoming clear that silver's next move could redefine what value means in the 21st century. The storm is already forming. Deficits, demand, and distrust all converging into one unstoppable wave. When that wave hits, silver will move not just as a metal, but as a message, a warning that confidence in paper money is fading and that true value is making its comeback. The question isn't whether it will happen. The question is whether you'll be positioned before it does. If you love deep market insights and want to stay ahead of these once-in-a-generation moves in gold and silver, make sure to subscribe to the channel and hit the bell icon so you never miss an update. Because the next time you look at silver's price chart, the world may already have changed.